Hi, Prue here from Harcourt's Green Living, here today with Jess to talk about some end of financial year top tips for our smart investors. Investors should see tax time as an opportunity to make sure that they are maximising their deductions. Property owners are able to claim a wide range of expenses associated with owning a rental property to reduce their taxable income and minimise their tax bill. Most investors would know about typical tax deductions such as interest on loans, repairs and management fees, but there are many lesser known ways investors can reduce their taxable income this financial year. Jess, would you like to share your first tip?
Thank you for that. So the first way we can do that is with prepay interest and expenses. So for borrowers with fixed rate loans, paying interest now for the next 12 months allows investors to claim the deduction this financial year. Expenses such as gardening or agents' fees can also be prepaid, and service providers may even offer a discount. This strategy is particularly useful when an investor's annual income is higher than normal, pushing them into the next tax bracket, and this is according to H&R Block Director of Tax Communication, Mark Chapman. Prue, back to you.
Thanks, Jess. Another tip is to hire a quantity surveyor. Depreciation is one of the most valuable deductions that property owners can claim. Investors can deduct the amount that assets used to produce income have declined in that value over the financial year. Estimating these declines is complex, so a quantity surveyor should be engaged to create a depreciation schedule. Depreciation is typically not claimed by up to 70% of investors each year, so they're definitely leaving money on the table. Many investors can claim between $8,000 and $10,000 in their first year, so it's definitely well worth the outlay of $700 odd.
So tip 3, replace low value items now. So while depreciation for expensive items such as hot water systems is claimed over several years, 100% deduction is available for items costing under $300 in the year those items were purchased. Whenever you replace a plant and equipment item, you get to claim depreciation against the new one. For anything worth less than $300 that needs replacement, replace it in June rather than July.
Tip number 4, claim borrowing expenses. The cost to take out a loan, including establishment fees, mortgage stamp duty and mortgage broker fees, can also be claimed, although these deductions must be spread out over 5 years. A lot of people forget to claim mortgage protection insurance that they might be taking out if they're getting a larger mortgage.
So tip 5, ensure claims are still valid. So recent changes mean that some notable deductions are no longer allowed. One of these is that a landlord is no longer able to claim travel deductions for inspecting, maintaining and collecting of rent. The fact that these changes have been made to these travel rules indicates that the ATO and the government believe that travel claims were being abused. Additionally, investors can no longer claim depreciation on second-hand items or previously used items in properties purchased or turned into a rental after May 9, 2017, as this deduction now only applies to new items.
Tip number 6, find a good accountant. Tax for rental properties can be especially complex, and a DIY approach may prove to be false economy. Most accountants should be able to give you the kind of advice you need to get your taxes right, but it's worthwhile checking that they do have experience with rental properties and asking the question about how many clients they have in that space. Ask them questions about specific tax affairs and what advice they will be giving you before hiring an accountant.
So our last tip for today is be careful what you claim for. The ATO is cracking down on dodgy deductions by property investors, and the punishment for rorting the system can far exceed any expected savings. The penalties can be up to double the tax avoided plus interest. Owners of holiday houses in particular are in the ATO's crosshairs, with a focus on people using their property for personal use and claiming deductions that are disproportionate to the income received.
Thanks, Jess. If you would like a comprehensive list of claimable deductions, please refer to our Investor Support Service tab on our Harcourt's Green Living webpage, www.greenliving.harcourts. If you own an investment property and would like to see how we can help maximise your returns, please don't hesitate to contact either Jess or myself here at Harcourt's Green Living. Thanks and have a great day.